Hello, ladies and gentlemen. My name is Greg Michalowski, and this is the End of Day Forex Report. Today's date, August 28, 2014. Looking forward to Friday, the 29th. Before we get started, let me remind everybody that if you're interested in this video and want to see more, make sure that you hit the subscribe button to my YouTube channel at Greg Mike FX. Also, if you want more information on foreign exchange trading and foreign exchange markets in general, you can come to my website at Greg Mike FX. Put in your email address here, and that'll get you a ticket to all the information that I have and I can share with you going forward. Economic news coming out. We have a slew of economic data coming out in Japan, but the video won't be done before then, but we'll be looking forward to that. ANZ Business Confidence out of New Zealand. Stuff comes out at 9 p.m. tonight. And then tomorrow we have German retail sales. Probably most important is the EU CPI flash estimate. The year-on-year estimate is supposed to show a 0.3% gain versus 0.4% last month. The core is supposed to come in at plus 0.8. This is going in the wrong direction for the ECB, but that's the way it is. So that should keep the pressure on the euro as long as it doesn't surprise to the upside. If it surprises to the downside, there's more pressure to the downside. So probably the most important release today, or in tomorrow's new day trading. The unemployment rate coming out of the EU as well, 11.5% is the estimate for that, unchanged from the prior month. Personal income and personal spending in the U.S. will be released at 8:30, along with the PCE deflator, both the regular monthly and the core deflator. This is one of the more watched inflation indices that the Federal Reserve looks at. Canada GDP also comes out at 8:30 with an estimate for the second quarter of 2.7%. Industrial product price and raw material price indices out of Canada also out at 8:30. And finally, at 9:45 and 9:55 respectively, we have the Chicago Purchasing Managers Index and the University of Michigan Confidence Index. All right, let's start by taking a look at the hourly chart here for the euro versus US dollar. And if we take a look at this week in general, remember a week ago, Friday, we closed the week at around the 132.42 level. This was just below the 38.2% retracement of the move up from the July 2012 low right here. This is on the daily chart to the high that we saw in May of this year. So the 38.2 comes in at 132.47. We closed last week at 42 right here on the hourly chart. We gapped to the downside as a result of the comments from Draghi at the Jackson Hole conference that the market digested over the weekend. For the rest of the week, the high price that we saw in trading here today was equal to the low price that we saw from Friday's trade at the 132.19 level, to be exact. So we haven't gotten near that 47 level on the top side, nor near the 42 level that we had as the closing level from last week's trading. But by the same token, we haven't necessarily moved all that far away from the low that we saw that occurred on Wednesday's trade around 131.51 level. So we have a difference of maybe 90 pips from the Friday's close down to the low that we saw this week. And if we look at the range for the trading this week, the actual trading that took place, only around 68 pips from the low to the high trading range for the week. So not a lot of activity here in going on in the euro versus US dollar. That is good, that is bad. Non-trending leads to trending, so we're going to be looking for an extension either to the upside or downside at some point. Maybe not this week, but certainly next week once we get into after the Labor Day holiday here in the United States. And that might make sense. That the summer's over, time for the market to move. But in the meantime, between now and the end of the week, we're still going to look for a range extension or anticipate a potential range extension for trading in the new trading day on Friday. And we do have some clues from the technicals here on the hourly chart. For one, we have this trend line coming across here. Now, it went below the trend line here, tried to stay below that level, couldn't then reestablish the trend line in yesterday's trade and again in today's trading. So we have that trend line, and it's going to more or less correspond very closely with the low for the week. So any sort of break below the trend line, below the low for the week, should open up the door to the downside. On the top side, we have the 100-hour moving average getting in the way here. We moved above the 100-hour moving average for the first time in trading today or on Thursday's trade, and that was met with modest buying. As you can see, we did go up and fill this gap going up to Friday's low at least. And then we fell off on concerns of the Russian-Ukraine situation. Invasion of Ukraine by Russia was the headline, which sent the euro to the downside. We spent the rest of the New York session kind of going sideways and really going sideways in the last 4 or so hours of trading. Any move above the 100-hour moving average would be a little bit more positive here for the euro versus US dollar. When the market non-trends, seriously, the buyers and sellers are no one's winning the battles. And so if it goes above it, it's bullish. If it goes below it, it's bearish. So any sort of move above the 100-hour moving average or any sort of clue for more bullishness, like moving above the 100-hour, would be positive, and we did look for the market to move up to 38.2, maybe up through the 19 level and through the 50% of this move to the downside would be the next 3 targets. After that, you look at the 200-hour moving average and the 61.8% retracement as levels. What you don't want to see is a price move back above the 132.47 level. That's my line in the sand for the really intermediate term bull and bear type of momentum. We broke below it. We're below the 38.2. Don't want to see it moving back above that level. So that's the euro versus US dollar. Now the pound sterling has a very similar type of bottom, if you will, except instead of just 4 days here, you can extend it to last week, Thursday and Friday. We have this yellow area in the top, which was our ceiling. We have this yellow area in the bottom, which is the first floor. The second floor is another yellow area. To be honest with you, I'll put it across here. This just covers the 2 lows that we have in place. So we have 1, 2, 3. This dissects the low and the high, and we stand in between the 2 higher levels here. We have the bottom side here, we have the top side there. Even before that level is the 100-hour moving average. That's the blue line in the chart here, and we're staying above that level. We only had, I guess, 1 close below that level in trading here today. And the next bar, we were back above it. So it's more bullish here by virtue of the fact that the pound sterling is above that 100-hour moving average currently at the moment. We do have this resistance up here at the let's call it 166 level as the top side of the yellow area, and the 200-hour moving average is just below that level. And so any sort of move above the 166 level, I think, should lead to further momentum. Now we've been above that 166 level 1, 2, 3, 4, 5, 6, 7 bars here, but no bars over the last 2 days have been able to close above that level. So if we're going to go higher, folks, just look for the close above the 166 level. I think that would be more bullish for the pound sterling. And that would be a clue that the price has further momentum potentially to the upside, with 38.2 and 50% retracement at the 166.35, the next target in that directional bias. Let's take a look at the dollar versus yen. What do we see here that it sticks out? I see the 200-hour moving average, the green line in the chart, holding support and trading here today. I see the price, or the 200-hour moving average, moving higher here and getting closer to the current price. The market has a decision to make. Does it want to move below that 200-hour moving average, or does it want to keep the or move higher and keep the longer-term bullish momentum going here and start a new wave to the upside here? That would eventually test the 100-hour moving average. First key resistance on the top side at 103.92. If we're able to get above that level, then target the highs that we saw in trading this week. It's as simple as that. If the market moves below the 200-hour moving average, the 103.44 level becomes our next target on the downside. Also watch the bottom side of this trend line here. This trend line is a parallel trend line to the top trend line here. We plug it in here, and the bottom side trend line comes in around the 103.30 let's call it 40 level currently at the moment, but goes lower after each hourly bar. Let's take a look at the dollar versus Swiss. This currency pair saw the market come down toward its 200-hour moving average, just like the dollar versus yen. The ability to hold against that level and also against the 38.2 was positive in trading today. We saw the market move back to the upside above the 100-hour moving average for a moment, now back below that level. Watch the 100-hour moving average at 91.54. Watch the 200-hour moving average at 91.29. Any sort of break outside of those, look for momentum in the direction of the break. The dollar versus Canada, after the huge move to the downside in trading yesterday, where we fell below the 100-day moving average. I'll go to that chart here. Here's a 100-day moving average. The market in trading here today consolidated in a sort of a bear flaggy type of formation. We have lower highs. We have higher lows. This consolidation pattern comes after the flag pull to the downside here, and suggests that we have further potential to the downside on a break of the lower trend line if that should occur. Now, of course, it may not occur. We could head back above the 100-day moving average here at the 108.60 level. 60 level and start to move back higher toward our 200-day moving average at 108.86. That's always a possibility, but if we do break below the low here, we should see further momentum to the downside. It takes us through the low price of the week and starts to move us toward the 108.08 level, which is the 50% retracement of the move up from the July low to the high that we saw in just a few days ago, earlier this week, as a matter of fact, for the dollar versus Canada. But right now, we're stalling just below the 100-day moving average and need to make up our mind what we're going to do here in that currency pair. The Aussie versus U.S. dollar had we looked at this yesterday and saw the market falling back below the 100-day moving average. That's this price right here. We moved above it and then fell down below it. So the 100-day moving average currently comes in at the 93.39 level. Let's go to our hourly chart, and that's where this level is right here, 93.39. Note here in trading in the early Asian session yesterday, market found support against the trend line here, moved back above that 100-day moving average, and spiked up to the upside. The move to the upside took it above this trend line here, but then we spent the rest of the day chopping back and forth. But the one thing that you will note here in the chart is how the market on the correction came back to that 93.39 level, the 100-day moving average, and found some support buying against that level. So this 100-day moving average is becoming a key level here for the Aussie versus US dollar. Stay above it, it's bullish. If we move back above this broken trend line here, it was strong. It had 1, 2, 3, 4 different points on it here. If we move back above it and move back above this channel trend line around the same level, around the 93.62, then look for further momentum to the upside in the Aussie versus US dollar. And finally, the New Zealand versus US dollar stays in between the 100 and 200 hour moving average here. The market in trading on Thursday went above that 100-hour or 200-hour moving average for the first time since back here. What is this? August 19th. So the move above here should have sent the price higher. It didn't. Instead, we found some resistant sellers against the 50% of this move to the downside, and we fell back below the 200-hour moving average. Now we sit in between the 100 and 200-hour moving average, looking for a break either to the upside or to the downside. If you like this video, you can like it on YouTube. Just go and click on the subscribe button here, and also for more information on foreign exchange, be sure to visit me daily at Greg Mike FX. Good fortune with your trading, everybody. Bye-bye now.